Welcome to our daily Forex market analysis, and this is for trading on March the 4th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll start off by taking a look at our calendar here. And before we dive into the calendar, just a couple of things here. We did have G7 meetings here, and we were expecting comments out of different central banks. However, we got something even more. So we saw Fed do an emergency interest rate cut. So they dropped the interest rate by 50 basis points. It went from 1.75 to 1.25. And we also saw Reserve Bank of Australia do a 25 basis point interest rate cut yesterday. We have heard from Reserve Bank of New Zealand saying they would have to do an interest rate cut to keep up with Australia. And tomorrow we have Bank of Canada statement. So it's highly likely that Bank of Canada will cut rates as well, at least 25 basis point, but they may cut to 50 basis point, or they may just do 25 this time and then another 25 in the next one. So we'll have to see how that plays out. But overall, Fed has cut rates, done an emergency interest rate cut, which they haven't done since October of 2008. Usually they do it when we have the FOMC statement, which is supposed to come out later this month on the 18th, March 18th, but they have gone ahead and done this prior to that. But on March 18th, we're expecting another interest rate cut, 25 basis points from Fed, and potentially another one in April. So we'll see how that goes. But for now, they have done an emergency cut. And the idea here is they're trying to provide liquidity into the stock market so that the stock markets don't, or the stocks don't fall like they have been in the last week or so. We have seen the stocks basically wipe out all the gains from 2019 in just a few days here, all due to concerns with the coronavirus. So having said that, we have seen US dollar basically had a negative reaction to that, which is to be expected, because when a bank does an interest rate cut, the currency tends to drop and the stock market goes up. So coming up here, we have GDP numbers from Australia. And if the numbers come in below expectations, that will be negative for Australia. Overall, though, we have seen Australian dollar go up, even though Reserve Bank of Australia cut the rates, it went up. So these numbers could have a negative impact, so keep an eye on it. Now, we do have the services PMI numbers out of China, and they are expected to come lower than the previous number here. But if they drop further here, if the numbers come in below the expected number here, that will be even worse for China because of all the concerns around coronavirus here, and it will have a negative impact on Australian dollar and New Zealand dollar. So keep that in mind. And then coming up on Wednesday here, we talked about, so there are PMI numbers coming up from Euro here. So a lot of services PMI numbers. Services numbers are more important than manufacturing for Eurozone, just because all of that, they are the UK economy as well as the Eurozone. The economy here is more service-based than manufacturing, unlike China. So these PMI numbers, they are leading indicators. So if they come in below expectations, that would be negative for the euro. But euro has been going up quite a bit, so we'll have to keep an eye on it. Any negative numbers can shake things up there. And then we also have ADP non-farm employment numbers. These numbers are also expected to be below the previous number. Now, if it drops even further, that will be negative here for US dollar. So with the Fed rate cut, we have seen US dollar has dropped already, and if these numbers come in negative or below expectations, it will have more of a negative impact for US dollar. So keep an eye on that. And then we also have final services PMI numbers for the US. So same thing as the other PMI numbers here. If they are below expected, it will be negative. The big thing here would be Bank of Canada. they're coming up with a rate statement. So Bank of Canada is expected to cut rates. They are expected to cut rates, seems by 50 basis point here, but at least 25 basis point is there's 100%, our market has priced in 100% chance of cutting the interest rate by 25 basis point, but they could come in with a 50 basis point cut because Bank of Canada does not want rates that are higher than the US Fed. So we could see a 50 basis point cut. So if not tomorrow, we may see that at the next statement date. But right now, there's about, I think, 65% chance that they'll do a 50 basis point cut in order to match the Fed cut. So we'll keep an eye on that. We could see a further, so if for some reason they do a preemptive interest rate cut to 75 basis points, then we are likely to see a further drop in Canadian dollar. So Canadian dollar has been weak in between oil prices that are dropping as well as chances of an interest rate cut. So again, if they go below, if they go to 1.00, then we'll see Canadian dollar drop across the board. So keep that in mind. And we also have non-manufacturing PMI numbers out of the US. Again, numbers are very important. If the number drops below 50, that essentially is really bad. So we are likely to see US dollar drop even further. But right now we are expecting it to be 54.9. So above 50, as long as it's above 50, it's good. It shows that economy is doing well. So, and we also have US, crude oil inventories here. And as we can see, we are expecting a buildup, and especially with the oil prices dropping. So if the buildup is higher than this number, that would be negative for oil. So we could see oil prices drop further, and it will have a negative impact on Canadian dollar as well. So keep that in mind. Now we also have MPC member speaking here. So far, Bank of England hasn't really cut rates or talked about cutting rates. Now, with different central bankers from around the world talking about interest rate cuts, so if Bank of England or any of the MPC members start talking about potential interest rate cuts, that could have a negative impact on British pound. So keep an eye on that. And then finally, we have trade balance numbers here from Australia. It is expected to drop. But again, with all that focus on trade and coronavirus at this point, if the number drops below this 4.80 billion, then it will be negative for Australian dollar. So that's what we have in terms of our news that's coming up. Now let's go on to our charts. So we'll start off with our with euro dollar as usual. So we have seen a big move up in euro here, and things have been super bullish. But now we are coming into these resistance levels where price hasn't been essentially since December of 2019, and we see a big pin here. So at this point, I would start thinking about potential reversals because the move up has been very, very sharp, and these type of moves tend to reverse. So keep that in mind. So for now, though, bias is still bullish because we do have bullishness in it, but I would start being cautious here. But should the price break through the resistance here at 1.2135 level here, this high of today, then this one could go further into 1.1240 and potentially even further into 1.1280. So that will be a major support resistance level all the way from June of 2019. But where it is currently, we could get a reversal. So I would keep my eye open for this. And the next target level here I'm looking at would be 1.100. So for now, even though it is bullish bias, I am looking, like I said, keeping an eye out for a potential reversal. So if it stays below today's high of 1.1235, it could drop all the way into 1.10. So between the bullishness of the candle and expectation to reverse, I would go with a neutral bias here. But like I said, there is still bullishness in the candle, which means it can go higher. So this is not a for sure a reversal sign at this point. So watch out for that. So neutral bias for euro dollar. Pound here, pound dollar has gone up mostly because of the Fed rate cut. Anytime we see central banks cutting rates, that is negative for the currency. So this one, it's still holding within this range here. So bias for now is bullish, but I would be cautious with the high. So if price is not able to make it through 1.2850, this can come back down towards 1.2720. However, now, if euro starts to turn around, this one could move up higher. So that's something I would watch out for. So for now, bias is bullish. Like I said, I would be cautious with 1.2850. If it doesn't go through, I will look for it to come back down towards 1.2720. But otherwise, the next target is 1.2920. So bullish bias here for pound dollar. Aussie dollar, this one has gone up as well, went right into this resistance, but looking at the candle here, this one is bullish, but again, I would be cautious with this one as well. With all these issues around coronavirus and the major focus on China, we could see a further negative impact in Australian dollar. So I would watch out for that. So I'm looking at 0.6620 as the level where we could see price turn. So I am looking for a move higher, but if it holds below 0.6620, I'm looking for price to turn back down and go lower. However, there is bullishness in this candle, which means price could continue going higher. So that's something we have to be mindful of. But otherwise, if it holds below there, I'm looking at 0.6540 as the first target, and then 0.6500 as the second target here. So neutral bias for Aussie dollar. New Zealand dollar, this one as well, price went all the way into the resistance and then it has dropped from there. But like I said, there is some bullishness in this candle. So as a result, I am looking for a little bit move higher into 0.6300, and that will be the decision point here. So right now, we're just looking to see how things fall because market has been very, very volatile, and with all these new things coming into the market, interest rate cuts and so forth, things can change. So that's why we have to be careful and look, keep an eye on things and see where it will go. We may have to wait for market to settle down a bit. So basically the move that I'm looking for is this, looking for a move higher into 0.6300. If it holds below, then we could see move lower, or it may go and retest the high and then it may turn around at 0.6330. So those are the two levels that I would keep an eye on. If it holds below, then I would look for a move lower towards 0.6200, towards the bottom of this this candle here. So right now my bias is neutral to bearish for New Zealand dollar. Dollar CAD here, this one has gone back and forth, as we can see. A lot of volatility here. So right now we are looking at Bank of Canada interest rate cut. And if Bank of Canada does a 50 basis point cut or more, then we could see price go up higher here, because that would mean that Canadian dollar is weaker and we could see a push higher. On the other hand, though, if they only do a 25 basis point cut, then we could see this one drop further. So like I said, at this point, we just need to watch and see how things, which way things want to fall, where the chips may fall, and then react to that. For now, though, I wouldn't want to get ahead of this. because as we can see, volatility has been quite high. So with this one, what I'm looking at is 1.3400. If it holds below, I will look for a move lower. But right now, I am neutral on dollar CAD. All right, so let's take a look at our commodities now. So we saw that our price here for silver has gone up. Now we do have a nice bullish candle close, but it is right into this solid resistance here. And the way things have worked out today is that even though Fed cut rates, which means the stock markets should have gone up and the safe haven assets should have dropped, that hasn't been the case. So market is still concerned, and as a result of that, the stock market hasn't gone up. So we'll see if that changes tomorrow or as other central banks cut rates. But for now, this one is bullish, but because it's into a strong resistance here, as long as it holds below 17.43, I would still look for a drop back. So basically, I'm looking for it to trade in this range that it has now formed. So neutral bias here. I'm not looking for a big bullish move, even though we have a nice bullish candle close. However, should it go through the resistance, then it could continue on. And in that case, the next target would be 17.85. For now, though, neutral bias here for silver. Same thing with gold here. We do have a nice bullish candle close, but as we can see, price is right into that resistance. So here I'm neutral as well. This one could go in either direction. And as we can see, price did not get negatively impacted by the Fed cut, which normally it would have done. So at this point, it is looking bullish. So bullish to neutral here because it's into resistance. If it holds below 1651, I will look for a drop. But once it goes through, 1664 is the first target, and then it could go all the way into 1689. So do watch out for that, but I would be careful with this resistance because if it holds below, chances are it will drop back down. So for now, bullish to neutral for gold. Oil has taken a hit. It did go up today and yesterday, last night here, but it has gone back down. So now we do have a bearish candle close. So I'm looking for price to drop back down, and target is 43.70. And as we can see, it didn't quite make it even to 50. So it just stopped at 48.75. So basically looking for a further drop here for oil. Copper as well, price was close to the high here of the range. It's been stuck in this range for several weeks now. So bias is bearish here. I'm looking for price to drop back down. First target would be 2.50, and then second target is 2.46 for copper. Bitcoin is looking range bound. Price went into this resistance and we have a bearish close here. So looking for a further drop for Bitcoin. Bias is bearish. 84.40 is the first target, and then we are looking at 81.80 as the second target here. So bearish bias for Bitcoin. All right, so let's take a look at equity markets here. Even with the Fed rate cut, let's go to a 1-hour chart here. We saw price push up, but then it has dropped since then. So overall, we do have a bearish candle close. And next target here is 29.45 and then 2900. So bias is bearish. So I'm looking for a pullback into So I'm looking for a pullback into 30.31 or 30.30, and then a potential drop. But like I said, markets have been very volatile. So should it go through the 30.30 level here, then I will look for a move all the way into 31.20. But right now, like we talked about yesterday, 31.20 has acted as a resistance, and we saw a drop. So now I'm looking for 30.30 3030 as the resistance and looking for a further drop from there. So bearish bias here for S&P 500. However, keep your eyes open because as we can see, we have seen some wild moves here. So bearish bias for now, 2940 first target, 2900 second target. Nasdaq here, this one as well, price went into resistance. We have a bearish candle close here. So bias is bearish in terms of pullback. I'm looking at 8,700 as the potential pullback. And if it holds below here, I will look for a drop. But should it go through this level, it could go all the way into 9,020. So keep an eye on that. For now, though, bias is bearish for Nasdaq. And then we have Dow Jones here, same thing. Price did go up, but then we saw a reversal here. So bias is bearish. And I'm looking at 25,500 as the first target, and then 24,900 as the second target. And in terms of a pullback level here, I am looking at 26,260. So basically the move I'm anticipating here would be something like this. Price goes up and then it drops. But same thing here, should it go through this level here, it could go all the way into the high here, and we could see price go into the top of this range that it has done some wild moves in over the last couple of days here. So for now, bias is bearish. But again, with caution here. DAX here, DAX has dropped. We have a bearish candle close, but price is still stuck in this range between 12,260 and 11,630. So this is the range it's trading in, and this is what I would expect for it to stay in. So neutral to bearish bias here for DAX. And then we have Footsie, same thing. We have a bearish candle close. I would look for a pullback, and pullback could go into, we could see a pullback into 6,700 or 6,720 level, and then a drop from there. So if it holds below that level, I would look for this type of a move. But should it go through, then I'm looking for a move into these areas, 68.20 and then potentially 69.40 level. So for now, bias is bearish to neutral. So we just need to, again, look for volatility. Nikkei here, Nikkei has gone back and forth. As we can see, we did see it go all the way up here, but then price has reversed. So bias right now is to the downside, and I would look for a pullback into 21,300. So right now it is moving higher, but if it holds below this 21,300, then I would look for a drop. But should it go through this level, then there's plenty of room to the upside, 21,780 and potentially all the way into 22,230. So for now, bias is bearish, but again, with caution. So right now, basically, there's a lot of volatility in the markets. Central banks and everybody else is trying to make sense of what to do or what to expect from the markets. So I'm expecting the volatility to continue. So it's very important to be careful with the trading. So I will leave you with that. Have a wonderful trading day, and I'll see you again tomorrow. Bye for now.